Welcome welcome to Target Professional Concepts. To benefit from this lecture, kindly request for the lecture materials through our WhatsApp or Facebook handles. So, my name is Fred, or you can call me Target. To take you into the financial reporting at the Target Professional Consult. Kindly subscribe to our YouTube channel or our videos, and then don't forget to turn on the notification button to receive all our videos. You can request for a specific video or a tailor-made video on all the courses for IC, ACC, ACIB, and CIMA courses or the programs. Today we'll be looking at one of the IFRS, that's the financial reporting standards, and then we will do justice for it. So be with me for the 1.5 hour ahead of us to complete the standards. Following the conceptual framework of financial reporting, especially the regulatory framework section, which talks about the rules and laws governing the financial statement preparation. Now we are going to now pick the specific rules and then deal with them individually. So under the regulatory framework, we learned that there are some specific laws that govern the structure of financial reporting. Please, if you have not gone through the first video on conceptual and regulatory framework, kindly go through so that you follow up to this level. Yeah, I'll put that one at the YouTube comment section or the video description section so that you can access that one. Good. But don't forget to subscribe and then request for all the lecture notes and the lecture materials that we are going to use. Good. So we said that the laws or the source of laws that govern financial reporting in Ghana or in every country will be one, the Companies Code of that country. So Ghana, the Companies Act, that is the Act 2019, Act what? 992. Good. Govern how accounts has been prepared in the company. And then we also talked about the stock markets. And then we talk about the European Union or the African Union directives or the instructions or some specific regulatory bodies. And then we talk about conceptual framework and then the IFRSs. So now we've started the IFRSs. So now we're going to look at the very first IFRSs. Now, the IFRSs, we're supposed to start from IAS 1. That talks about presentation of financial statements. That's the preparation and presentation of what? Financial statement. That's IAS 1. But the issue is that it's a topic on its own, going for 20 marks. So I normally reserve it. So when you're doing the publication, then I'll use it to treat the entire IAS 1. So that means I'll move on to IAS 2. So today's edition, purposely or particularly forward, IAS 2 talks about inventory. So IAS 2 talks about what? Inventory. So let's see how you get the inventory or accounting for inventory. So IAS 2 for today. IAS 2 for today. IAS 2, International Accounting Standard number 2. That's what? Inventory. Please, anywhere you write this standard, please write in their full name to it. Don't be assuming that the examiner knows, so you will understand. No. Anywhere you write the IAS, so you say IAS 2 without the word inventory, Probably it's not complete too, so you know. But the same way, the lawyers will tell that if you can't quote or if you cannot what, tell us the text over there, they don't quote at all. Good. Now, inventory. Every standard that you pick, can you know basic 4 to 5 items about the standards? One, what is the objective of that standard? So all the standards have objectives. Two, what is the scope? All the standards have a coverage. Does it cover all inventory or there's exceptions? And they have to learn the exceptions and how the other standard deals with what the exception. Then three, you can also talk about basic definition of some terms in the standard. So the definition of what? Some terms. Basic definition of what? Some terms. So they mentioned NRV, they've mentioned fair value, they've mentioned inventory, you should know them. And the fourth one is that you should know the recognition criteria of that item. Recognition criteria or the recognition basis. But let me even add a measurement to it so that I won't write plenty. So recognition of what? Measurement basis. So these two, they are different. And the last one is the disclosure requirement. So disclosure requirements. So all the standards that we pick, you don't need to worry. In fact, where your examiner will get you is this section, the recognition and the measurement. If you don't understand anything in all the standard, when you get to the recognition and measurements, please, you have to relax and slow down to get everything at that level. Why? Because most of the calculation that you're going to do is on measurement, determine the value. And then the definition sometimes based on the recognition, then you are done. So let me start with the objective. Now, the objective of every standard is to prescribe the correct accounting treatment of that standard. That is the objective for every standard. So as long as you know the name of that standard, you should know the objective. So just adding what? To prescribe the correct accounting treatment of that standard. So if IAS 2 talks about inventory, then what will be the objective? What's the purpose of IAS 2? Why did the board worry themselves issue IAS 2? Okay, IAS 2 is there to prescribe what? The correct accounting treatment of what? Inventory. So that when you have inventory and then you are looking for how you can derive the value or how you can measure it, then you can use what? The IAS to go. So now we know the objective. So if I say, okay, IAS 16, PP, property, plant, and equipment, what will be the objective? Now you know the names what? Property, plant, and equipment. So to prescribe correct accounting treatment of what? Property, plant, and equipment. The issue goes in are these. These are the issues. So this is the objective, and these are the specific issues in the standard. That is it. Now, what about the scope? Scope, I'll give you the basic law. In fact, this law applies to life. Scope is the coverage. Does it cover all that item? So that meaning that IAS 2, does it cover all inventories or the exceptions? Good. Now, the issue is that anytime there's an item, so here, let me take an example. Anytime there was an item, and that item is an example, let's say, example of inventory. I'm giving an example of inventory. Maybe if I'm a farmer, then I have, let's say, cocoa. If I have cocoa will be what? Will be an inventory to a farmer. But when you mention cocoa, the standard is there was a specific standard or major standard that talks about cocoa. We call it IAS word 41, biological assets. So long as it's a big standard on its own, you mention it here as an example. Your requirement will not control over him, or your requirement will not what like prevail over him. So it means that the requirement of IS2 does not cover what cocoa beans or agricultural produce or biological what assets. Biological assets. How we get it? Good. So that is it. So in short, have you seen how river enters sea? River cannot go straight and then enter the sea straight, right? You have to salute and pass the edges. The same way happened to the standards. So long as it's a big guy, you mention it here as an example, does not give you the authority to rule over that item because it's a big guy on its own. It's a big standard on its own. So that is the general exception rule. So anytime they ask you for the scope, in fact, you say it covers all inventory except those covered in what? Other standard. Except those covered in what? The other standard. What are they? The cocoa beans and then the long-term construction contract. We will look at them. There are three exceptions. So that is it. So that's the scope. Please let me tell you the truth. The truth of the matter is that these two items, for example, now ask you, you have to know it for your own good. Or why should we ask you the scope of inventory? Not at all. We won't ask you. It's not time. What we ask you is here: recognition and measurement of inventory. That's all. How to record inventory, how to get a value. We are done. So if we're not going to get the recognition and measurement clear, kindly visit the conceptual and regulatory framework for the understanding. So that is it. Now, inventory, this standards basically talks about how we are going to what? Record inventory. How we are going to record inventory. So let me look at the scope. So it covers all inventory except the following. So it covers what? All inventory except what? The following. So that's great. It covers what? All inventory except what? The following. How we get it? So first, except long-term construction contract. That's IFRS 15. So long-term construction contract IAS2 does not covers it. So that's the exception. First exception. Second, biological asset. Biological what? Assets. Biological asset. Biological asset. What are biological assets? That's the farm produce or farm animals. I'm not talking about like farming assets such as long-term plant, vegetation, cocoa plant, berry plant. All of these are covered in IAS 41, biological assets. So if you will probably pigs, goats, any other animal or aquaculture, they are what? Biological assets. And then even though they may form part of inventory, this standard will not cover it. Why? Because a bigger standard talks about them. Good. So that is it. And then we can also talk about financial instruments. That's IAS 33. So the exception to the inventory are so inventory, this IAS2 covers all what? Inventory except what? Three items. What are they? Who can tell me? Now, except what? Long-term contracts or construction contracts. So first, let's write the exception. So except it covers all standards except what? Long-term construction contract. From where? Customers. Good. Then two, we also say that biological or what? Asset. It didn't say biological weapons. Biological what? asset. So biological asset. That's IAS what 41. So this one is IFRS what. But I'll talk about this one very soon. I think if I can take this section away and put them there, it's going to be very useful for those who want to take some small notes down. I think I can do it this way. So as and when I'm done, I'll keep them it back. So that is it. So the scope, we will say that it covers all events except. So this standard it what covers all events which except and like this. Please, exception to every law, learn it to one. They said that long term construction contract. Construction contract. Let's see. Good. So long-term construction was contract. So contract. Then two, it also excludes what the biological aspect. So biological assets. That's this one is IAS what 41. This is IFRS 15. Good. And then three, it excludes what financial instrument. Financial instrument. So that's IAS 32 and 31.9. Okay. So that is it. Oh, sorry, that section wasn't coming well. Let me see. Okay, good. So these are the section. So now let's see. These are the exception to the IAS. Now let's look at the basic definition of some terms in the standard. Basic word definition of some terms. So what is inventory or what are inventories? So let's look at the definition for inventory and then you'll be fine. So the definition for what? Inventory. The definition for what? Inventory. So definition for inventory. So that's the basic definition of some terms. As and when we move, when they come around, we will do justice. So inventory. The inventory is an asset, right? Made up of what? Made up of the following. So that's the definition of inventory. So inventory is an asset which is made up of what? Made up of one. So one, raw materials. So raw materials. Two, work in progress. So work in progress. Now we call it what? Good. So three, finished goods. So finished what? Goods. So that is what inventory or consumable in the form of what? Production supply. Good. So that is it. Now the fourth one we can talk about consumables or production supply. Consumables, that's the raw material. And we don't have what we call consumables in the form of what? Production supplies. So any item that we have to consume or we have to use or that will help us, not necessarily that will form part of the finished product, but we need to use it before we can produce. That's the consumables. So sometimes we don't sell rice, but we need to get some rice in order for our production to go on successful. That's to feed what the employees and then continue the game. So that is what inventory. But inventory, they are just your trading stock. They are what? Stock, as you know. No, so stock. Now that's the definition for inventory. I'll tell you the main aim of this standard again. Now, this standard describes how the value of the inventory will be what? Obtained. How the value. So you cannot finish this standard without you knowing how you can derive the value of the inventory. That's the main word purpose of the IAS 2. Good. Now, the value of the inventory normally changes, or the recognition, the value of the inventory and how it must be recorded, and how it must be what? Recorded. The value of inventory and how it must be recorded, and then how it must be what? Recorded in the books. Now let's look at this, especially the recording section. Inventory, at point in time, they are what? Assets, and then at point in time to their expense. Wow. Now let's see. Now, according to IAS 2, together with what? The matching concept. Now that the matching concept, in fact, that's the accrual concept, stated that the cost must be matched against what? Revenue. Cost must be what? Matched. Or great. So the matching or the accrual concept states that the revenue. So let's write it again. The accrual concept requires that revenue and expenses must be what? Matched. So revenue and expenses must be what?